Alright, so I'm going to be focusing on is again Section 7M, the trend study, but with a very specific focus on springboards. So he's mentioned one, two, three, four, five, six, about six springboards or references to springboards in this study. So just be going through each of them. So the first one is in 2, section 2. So this was the chart. Top is the first part, bottom is the second part. So let's go over the first springboard. There's about 1, 2, 3, 4, 5, 6. 6 of them that are mentioned in references mentioned in section 7, and then there are a couple of others. 1 in 8, 3 in section 10M. But this, I'm just going to focus on the ones in section 7M. Alright, so here, the first time is here, where he talks about our next buying opportunities on December 29 when the market completes 3 days of lower support, but the close price of each of these days is between 140 and 141, meaning it's clustered, showing that the selling pressure is losing force since the net result of these 3 days pulling and hauling is leaving the average unchanged. So right there we have a springboard. So following a considerable reaction. So that's what he says. So that considerable reaction is the selling climax. Here you have a selling climax, and it shows that after the climax the selling pressure is losing force, and you have clustered closes, which is the evidence that it's losing force, and at the same time lower volume on the reaction from the December 18th compared with the volume of the mid-December decline confirms the inference that selling pressure is losing force. Buying power is overcoming it, as it now appears that the market has completed a secondary test. The average is now on the springboard. Anyway, so this right here on the top chart, where you have a climax, and then you had that change of behavior bar, volume off the bottom, and then it pulled back and consolidated. And this is not just a 2 bar consolidation, a 3 bar, this consolidated, and then finally it tightened right there. So the average is on the springboard right there. Okay, with the low volume on the test. Anyway, so that's the first time. So the next time that it's mentioned is on page 8, paragraph 1. Page 8. Where is page 8? I think it's in the absorption. Such absorption is evidently completed by February 9th, when after closing atop of the previous Saturday and advance into new high ground 160 is recorded. Notice the speed. Okay. I mean, he doesn't call it out here, so I don't know what he's saying here, but over here, paragraph 1 and footnote, it seems like he's saying that this on the springboard again, right here on the absorption. So you have a springboard right there, and it's ready to go into markup. So absorption is also at resistance or support or whatever, is also, looks like it's considered to be a type of springboard. Um, the next one is page 7, no, 7M page 10 part 1. So page 10 part, what the, alright, so referring to the action of February 27th. Okay. It's on page 10. So February 20. This I can't stand because it's a little bit. February. I think right there. And it says on this 27th, however, we notice a clear lower top, lower bottom, and close, and some, but not a very large shrinkage in volume to about 3,700 shares. Significant feature of this day's action is that it is a pronounced change in behavior in the market's behavior. It is the first time that volume has remained so high on a reaction. Alright, so this is the change in behavior bar. I think he's talking about this, but he references it as part of a springboard and says that section 7M page 10 part 1 referring to the action of the average of February 27th. Alright. Here, and he said that the fact that prices cannot continue to advance into new high ground with such high volume lead us to conclude that the big fellows are unloading, and the relatively large volume on the reaction of the 27th indicates they're filling up all the buyers from the high. Anyway, so I think he's saying the average is on the springboard also here, right after that change of behavior, after smart money's selling a lot. Alright. And let's go to the next one. Let's go section 10M. Did I do this already? 7M page 10. 7M page 15. Alright. Page 15. Page 15, paragraph 3. On March 26th, the average starts downward, plunging the recent line on supporting the steady expand of the next section. Tells us in advance. Yeah, I don't know. He's saying again that over here it's on the springboard, or this was in reference to springboards here, which is a breakout. So I guess that the market is on the springboard because it was ending distribution and we're getting ready to break. So right here in that point, it's, I believe it's on the springboard, or it was referenced in his work. So next is page 15, part 3. So March 26th right here, the initial break, and he said, alright, after all of this distribution, the market is going to puke. Next is page 20, part 2. Where is this? Must be this. Okay, from the 8th to the 15th, a zone is established between 130. Yeah, I have no clue where this is. 130 and 120. So I think he's talking about this. 130 and 120. I don't know. It looks like he's talking about, okay, it tightens up here, and you can really see the apex though. I don't want to use the term rising wedge, but you know what I mean. Like on top here, and then that sets up the pullback. Anyway, so moving on to the next one. On page 22, paragraph 3. Paragraph 3. Okay, 1, 2. page 22 paragraph 3 and page 22 part 1. Is this right? Page 22. I don't know. Paragraph 1. June 22nd was a higher open and a gain of 7 points in the average, most of which is held for the day. The volume runs up to 4.6 million. The price is gained. Okay. I mean, he doesn't really say, but I think he's referring to this action right here. It's not that clear. Like this action here, where you have like a apex here or a triangle. Basically, this action you had public participation right there on that bar. You had heavy selling on the bar right after, as expected, because the public was in. Then it goes up and there's a shortening of the thrust and lower volume, and another shortening of the thrust and also lower volume, even though the closes are high, which was a bullish indication. The bearish indication was a shortening of the thrust with lower volume and public participation with selling in the background. Then it pulled back and the volume was lower, and eventually it suddenly increased here on this bar. After that, this bar, this dipped on volume, was a lower high, lower low, and a lower close. So that's the point, and I believe he's referring to that point as market being on a springboard. Alright, but he doesn't say it that clearly in the study. He just references it later on as part of springboards and says, take a look at this section. Section 23. Next one is page 23, part 1. I think it's the same thing. Anyway, it's the same thing. It's all part of it. So, what are the key features in this one? The key features in this is the public is trapped. It's at a prior range or zone. The public is trapped. There is selling. There is shortening of the thrust. There is decrease in volume. It tightens. There's a sudden increase here to terminate the move, and low volume attempt to rally here, and finally it tightens and breaks. Alright, so that's the key feature of this. And I think we've gone over all of the springboard references in 7M, so I'm going to be stopping the recording. The best one that I see is actually here, this setup here, where you have a climax, you have a change of behavior or volume off the bottom, then you have a pullback of low volume and clustered closes. Similarly, this one up here is very similar. It's the same concept. Climax, change of behavior, just like these two prior bars, and then it tightens. So that's something to remember. And here the breakout is a very good trade, because I think it's easier. You have two lines up and down, and you have selling in the background, and this is actually, I think it's with trend because it's a lower low right here, and then you have a break on heavy volume that takes out the support level. So this is a really good one. I think that there's not too much judgment involved, or it's something similar to what everyone else everyone already knows, which means support and resistance, and then the breakdown on heavy volume. The other ones, I mean, I think he talked about it here as well, where he said that price was tightening. Went to a former support level, had an inability to rally. When it had an inability to rally and started tightening to some type of dead center, or and then it has this move that goes up, but it goes down, and then it breaks as volume is expanding. So this was a nice opportunity, and has clarity because it went up and failed and went back down. This one here was short covering. This piece right here was the low volume rally. Oh no, this was the high volume down rally, which indicated liquidation. Later on, he talks about the low volume professional market. Here you have the short covering, which was preceded by high volume on the reaction, a low volume rise, which terminated on a sudden increase in volume, and a bar that seemed strong, but it wasn't, and it broke. Now this right here may have confused people because the reaction has low volume. Like if you consider this a breakout or some type of breakout, then this is what you want to see in terms of low volume. But putting everything into perspective, that the initial bar had no follow through, low volume rise, then a sudden increase in volume, and then you have to not think of it as a breakout, but instead think of it as a minor buying climax for the swing. Then it broke, and right here heavy volume came in, and as you can see, like the thrust shortened, relatively speaking, and it was severely oversold because it really extended down from this break. This was a big break and then shortened. Heavy volume came in, and you had a heavy volume reversal. So that's your change of behavior. And then you had a follow through, which was very important. Follow through on high volume. Next bar, even though the close is less, it has a higher high and a higher low, which means basically you have 3 days of consecutive higher high, higher lows. Then it pulled back and volume diminished. That was a bullish indication. An immediate rally, close above the high, and it over here it kind of tightened and said, okay, low volume rally, tightened, and this set up the reaction on increasing volume. Because it tightened means that activity was greater on the downside, but when it did come back, it held a higher support level, and because it held a higher support level on low volume, it set up a bullish condition, and this was the breakout on heavy volume and good range and close above. That set up a potential long that this piece I've already gone over. And then over here, this is where you had low volume liquidation because buyers were indifferent. This I forgot what he said. Here you have selling has resumed, the liquidation has resumed. Here you had high volume come in, but I guess it was some type of short covering. How the attempted rally came here, and it was immediately checked on comparative volume, and that's not a good sign for any bull maneuver. And also this was a very extended move down, like it was a big leg down, so that was a violent move back up that was checked, and eventually you had resumption of liquidation, hypodermic style maneuver, or extremely oversold condition here. You could tell from low to low to low, bang, it really overshot right here, and then reversed on heavy volume, made a higher high, higher low, but the close was lower, and right afterward follow through came. It didn't come on the second bar, but it came on the third bar and fourth bar. So it's showing the good volume and continued up like you have higher high, higher low, higher high, higher low, higher high, higher low. Then it pulled back on low volume. That was a bullish indication. Goes up at resistance, but it kind of has that sudden increase and no follow through, which is not a good sign. And then it pulls back on low volume, holds support, reverses right there, and continues. Here he was concerned, I think, because of the high volume there that was sudden, and I think that's all there is. Alright, so that was a quick summary. Again, the focus is really to get a good understanding of those springboards and trade them. Alright, take care, bye.